Hello and welcome to The Trade. Let's get into the technicals and see what the charts are telling us after that jobs data. Nick Twidale from ATFX joining me now. So an increase in full-time employment, but a decrease in overall employment and an increase in unemployment. What's the Aussie doing?
Yeah, a little bit of a mixed bag, but it's dropped off. So it came off about 15 pips, but not a massive amount. I think the market's got a little bit of fatigue with the volatility we've seen with these unemployment numbers. So it's not a massive drop so far, but I suppose it is a negative to me. The headline will probably later on will be that 4.5%, so the unemployment rate ticking up. That would put a little bit of pressure on the Aussie, but we've got other things going on in the market as well. So we'll probably see it probably nip underneath the big figure today. You can see from the chart there, it's in the middle of ranges on the daily. You'll probably see it oscillate down around that 71, the figure. It's down around just around 71.02 at the moment, oscillate around 71, the figure for the rest of the day, and then we'll look to London to see where the next catalyst is in the next 50 or 60 points.
Yeah, reality will bite us soon to remember that we're not that important in the global picture. You know what is, though, is the Japanese yen. What are we seeing there?
Certainly is. A lot of strength last night after the surprise move from the US Treasury. So dollar got hit and dollar yen got hit harder. And I think, well, I kind of know really, speaking to people in the market, there's a nervousness out there when we do see a downside mood in the dollar and an appreciation in the yen, that maybe we'll see the Bank of Japan and indeed maybe the Fed come in again. So it was kind of an exacerbated move in dollar yen, and it was a bit of a breakout of recent ranges. As you can see, it was grinding higher again towards 160. We're back down just above 158 now. So plenty of volatility to come for yen, I think. From a charting perspective, as you can see from that, due to the intervention, levels are miles away. So it's a tricky one to call, both from a fundamental perspective and from a technical perspective at the moment. But you have to trade it on what news comes out next.
Let's talk about the euro and what the base case is here. Is it still the Fed ECB rate differential?
Yeah, I think so. And we've got Jackson Hole coming up as well, which is going to be very interesting. And primarily, we'll once again be focusing on what Kevin Walsh says there. As you can see from the chart there, we got a nice break higher. So it was sitting, it had been grinding higher on the back of the lower dollar, in all honesty. And then last night's move saw it jump, consider about 50 or 60 points. We're up out that range. We did break some key technicals, so that trend line resistance and the 200-day moving average, which is probably more important. It does open the way for a move higher, but we've got so many variables at the moment on both the euro and the dollar side, and mainly from geopolitics in the Middle East, that it could go 50 or 60 points again either way.
And what's the risk for the pound, do you think?
Same again. Pound's got very similar patterns to what we've seen in the euro. They've been trading quite boringly in line with each other, but that does tie in with the fact we're in the middle of the Northern Hemisphere summer as well, and everyone decides to take a bit of a holiday. You can see from the chart there, good break up through recent highs. If anything, that's probably more of a bullish break than we saw in the euro, but it has retreated back again, and so it's going to be interesting to see what the dollar does in the coming sessions, given what we saw from the Treasury last night, given the reaction across different markets. I don't think markets are that convinced that we're going to see the dollar capitulate or yields pull back on the long term, on the longer end of the curve, or even the shorter end of the curve, to be honest. So it could be another bit of a flash in the pan from the Treasury Secretary.
And gold, I mean, it's sort of resuming its rally somewhat back to records. And we know the reasons sort of behind this, but where do you see it targeting?
Gold's been very interesting and very difficult to call over the last several months. So we've said this so many times, like geopolitical factors normally push it higher as a haven trade, and it's come off since February. But over the last few weeks, we've started to see signs that gold's moving back in line with geopolitical concerns. Having said that, last night's move was firmly in line with the dollar. The move the night before, which actually dropped about 2% the night before, that came on the back of hardly anything moving, and just batting up against those resistance lines. From a technical perspective, break through that trend line resistance overnight, but it has halted at that 200-day moving average. You can see on the chart there. Another one that feels like it's at a pivotal point. If it does get a clean break higher, we could see it accelerate back up to sort of 4,800 levels, which it topped out back in the middle of May. Or once again, if the dollar starts to pick up, maybe things improve in the Middle East, we could see it drop back into ranges. But we're seeing huge moves in gold on a daily basis. It was over 4% last night.
Yeah, all right, Nick, always good to chat, and thank you for talking us through the jobs data as well. Always an exciting time. That does it for this edition of The Trade. Be sure to join us next time.
Thank you.